Welcome, ladies and gentlemen, to the weekend stock talk for August 16th. So looking back on the indices today, pretty much all up, but this is with respect to the past few days. This is the S&P 500 SPY daily time frame. This is with respect to the past few days in which we had a significant drop of 3% in one day. But let's think about this for a moment. What is happening here in the past few days? Well, we came down significantly. We tried to recover. That was negated. We tried to recover again. We got negated. We tried to recover again. What's happening to market sentiment at that time? Well, sentiment is dropping. There is more pessimism in the markets. There's probably more bears in the markets than the bulls at that time. Well, in that case, what would be happening is we'd be trying to form a bottom. Now, pessimism in itself doesn't mean anything, but when we have extreme pessimism, as we have seen a little bit right now, that is the area in which we could be potentially forming that bottom. Now, in the last stock talk, we did talk about the idea of the first leg down, followed by a retracement, and then followed by a next leg down. Now, that is still possible and in the equation, but let's take a step back and think about things for a moment. Okay? Because one can say, oh, today we had an update. Well, Monday's just going to drop, right? Or if Monday goes up, Tuesday's going to drop. We're just going to continue the cycle forever. We all know it's not going to continue forever. The market will pick a direction to the upside or to the downside, and then it'll do its thing. But we have to take a step back and let's take a look at TVIX, because this is something I've mentioned in the past. So zooming in on TVIX, and this is just the past since February, in order for bears to really prove something to me, we need to exceed the high of this candle, which is at 27.28. When we exceed the high of this candle, it tells me that, well, the trend may have flipped from bullish to bearish, and that is the major trend that I'm talking about for broad markets. But looking at this chart in itself, okay, these are still a series of lower highs, and we still had lower lows, right? But more emphasis on the lower highs. Bears have not been able to successfully push us over 27.28. So until then, this is, in my opinion, still a bull market until there's something said otherwise. Now, with that said, we always have to have some sort of bias, right? Our bias is either bear market or bull market, right? Because my bias is a bull market, let's talk about support levels. Because if we were looking back over here in this time span, and we looked back in these days, we can say, whoa, this was nearing the bottom. And we just rallied from there. This was chaos and confusion, and we rallied to new all-time highs. Okay? Now, another instance is if we take that next leg lower, which is possible, I expect bulls in a bull market to defend these levels. Okay? Defend these levels. My point is this. When we're looking back over here in a bull market and we looked at this point in time, we'll say, oh, well, the 150 period moving average, the yellow line, act as support the entire time. Well, why didn't I buy into that? Well, there was a lot of chaos and confusion at this time. So, point is this. In a bull market, I expect us to make a stand here, make a stand here, or make a stand here. Now, so far we're making a stand. If we look at the ES chart, you can see we've already made a stand at the 200 period moving average. This was, once again, August 6th, right? We came down, made a stand at the major moving average of the 200. Here's the S&P 500. You can't see it printed, but it did it after market. So bulls already made a stand, so it looks better on the ES chart. So why does it look better on the ES chart? Well, right now, what we can see is low, higher low, and the bulls are attempting to reverse this trend, okay? Now, can we have volatility that continue on? Of course. And can we dip lower once again? Of course. but I expect bulls to come back and hold these areas, and first and foremost, not to exceed this high, which we have not yet. Okay? All right. So let's just go to the intraday charts and look at the 5-day, 5-minute. So what's been happening, right? Powerful move higher, and even more powerful move lower. And you can see, what is this? Confusion. We're trying to rally and do what? Climb the wall of worry, right? Have you heard of the wall of worry? This significant sell-off, we're trying to recover this. This is climbing the wall of worry. Again, when people are extremely pessimistic, we look for that potential reversal back to the upside. Okay. All right, let's take a look at crude oil. So crude oil, going back to the daily time frame. So here's crude today. Still pretty bearish. If we looked at this chart, this in itself is not convincing enough to me that we're ready to move higher. We can still see a series of lower highs, and we still see higher lows, so this is still in a wedge type pattern. So you can see a very definitive resistance has formed. Can you see this resistance line? That is something that we need to break, and break above $59. I think what's happening is, as crude continues on forward, it's going to have a lot more resistance to deal with. Crude over here had the moving average all next to each other, which means that if it pulled across, it would have been quite bullish. But failure to pull across, we have a split moving average. And all of a sudden, this looks much worse in terms of a position than compared to this instance here, right? So my point is, the price here looks significantly worse than the price here because we have to climb these moving averages, which is tough. So until it can get over $59, this is still bearish crude. Natural gas still getting rejected at the typical 50 period or the 20 period moving averages. The trend has not changed here. Bulls need to show up for many, many more days, or maybe a couple of weeks, for me to say that this trend has flipped back to the upside. Gold futures is still around, hovering around 1545. Gold is bullish, but we're nearing resistance. We've been talking about this quite often in the past few days. This is still resistance. You can see, why hasn't gold flown over that resistance yet? Well, there's a significant resistance line up there. Just knock something out. All right. So now we'll go to your comments. And all right, Coolio, at the end of the day, all that matters is what Trump tweets. Yeah, so tweet is certainly influencing the markets, but in the end, like I said, we take a step back and we look at everything and we say, is the market trying to find buoyancy at a potential bottom, or is the market ready for another flood lower? So far, I don't see another flood lower. Can it happen? Certainly. Can we get towards this area and still not get a higher high? Of course. And that would correspond possibly towards SPY going to the 200 period moving average. But do we have to do it in a bull market? That answer is no. Steve, great video. Amazon was really helpful. Great, thank you. Jim, prudent to sell the rips as we are in a long-term bear market. Every indicator says so, and there's a lot of bullishness out there. Well, if you take a look at sentiment out there, I would disagree with the saying that there's a lot of bullishness out there. Actually, there's quite a pessimism out there. You can see the bond market soaring, and that's more of a safe haven, right? So not a lot of bullishness out there right now. And then Eric, hey Kevin, could you look at WDAY? Absolutely. So WDAY. Yeah, so in a day in which the markets do well, we would be looking for this to hold the 200 period moving average. So this is looking good. Now, of course, we need market conditions to continue improving And if we expect that improvement to occur, your 200 period moving average is your line in the sand. It's a pretty good place to trade off of as your support. So I like this chart. This is clearly on an uptrend. Can you take a look at this? And right now, it's attempting to form your next base support. I like it. Good stuff. Thank you, everyone, for watching this video. Hope you have a great weekend. Try not to get too confused or puzzled by what's happening here. A lot of rips and dips, right? Up 2%, down 3%. And if you were looking at your portfolio, you'd be like, whoa, like what's going on? But in the end, everything will go back to equilibrium. All this panic will be relieved in a bull market. And when we're back over here, we'll be looking back down over here and saying, wow, that was a lot of unnecessary panic. Okay, so again, can things change for the bears and them taking control and pushing us into a correction or bear market? Absolutely. But so far, we don't see it yet, and hence my sights are on higher prices rather than lower prices in the markets. Can we have a dip? Absolutely. But again, in the future, in the next few weeks or months, looking for higher prices in the markets. Thanks everyone for watching this video. Have a great weekend, and I'll talk to everyone soon.